Thank you for joining us this Friday, the 4th of February. I'm Sophia, a market analyst with Bell Direct. This is the weekly market update. So far this week, the local market has gained 1.3% Monday to Thursday. All sectors are in the green except for tech shares, which is slightly lower, while the energy sector has gained the most week to date. On the ASX 200 leaderboard, Nufarm, NUF, has performed best. The agricultural chemical company's share price jumped an impressive 28% following the release of a trading update. The company's first quarter revenue grew 36% over the prior corresponding period. Flight Centre, FLT, is the second best performer. Its share price boosted after Prime Minister Scott Morrison said that he hopes to see international borders open before Easter. And building company Boral BLD also advanced this week. Investors have been taking interest in Boral and have been buying in since the company announced a $3 billion capital return to shareholders. The worst performer was manufacturing company Ansell ANN, which saw a large sell-off this week after delivering preliminary half-year results and an updated FY22 forecast. Its earnings were weaker than broker forecasts. Macquarie says ANN's earnings were weaker than they expected, despite them foreseeing the COVID-based supply, labour and earnings issues. Macquarie upgraded the stock to neutral from underperform following the big share price fall, and ANN is over 17% lower this week. Now, taking a look at the All Ords, Nufarm also topped the AXO, followed by gains of over 20% by Auto Echo Minerals AUT and Booktopia BKG. The most traded stocks by Bell Direct clients this week included the Vanguard Australian Shares ETF VAS. VAS tracks the largest 300 stocks on the ASX, and the ETF is undergoing some big changes, namely Afterpay's recent delisting and BHP ending its dual listing across the ASX and the London Stock Exchange. BHP will soon make up 9% of the ASX 300. The BetaShares Nasdaq 100 ETF NDQ was another highly traded ETF this week. The Nasdaq index closely missed its worst January ever this year. Also highly traded was ANZ. Yesterday, Macquarie retained their outperform rating on ANZ, and UBS reinitiated coverage of the bank with a buy rating. Clients also bought into BrainChip BRN, Ramsay Healthcare RHC, the Vanguard MSCI International Shares ETF VGS, and BHP. As mentioned earlier, this week BHP officially combined its UK and Aussie businesses to simplify its corporate structure. BHP is now the largest company on the Australian share market, followed by Commonwealth Bank. And clients took profits from the BetaShares Australia 200 ETF, Pilbara Minerals PLS and Boral BLD. Now that we're in the very early stages of reporting season, it's worth discussing what can be expected this month when most companies will be reporting their half-year results. It's an important month, particularly for the long-term investors. So we'll be bringing you updates on earnings and profits, sales, dividends, and the future outlook of companies. It's also a great time to identify the companies with more long-term value. Investors can do this by seeking businesses with greater cash flows and earnings, and then considering how those businesses can most effectively deploy that cash in the years ahead. Now, there have been some concerns in the market this year, particularly with rising interest rates and the continuing impacts of COVID. So what can we expect from this reporting season? Firstly, we know retail stocks have suffered from the impacts of COVID regulations and restrictions. There have been large staff shortages, global supply chain difficulties, and huge delivery delays, which will impact bottom lines. Large consumer staple stocks had similar negative impacts stemming from COVID. The pandemic has also adversely impacted the healthcare industry. For example, CSL had global supply chain issues with difficulties obtaining plasma required to make their products. Other healthcare stocks were impacted by the pause on elective surgeries. On the other hand, companies such as Helios HLS have benefited from COVID testing in their pathology clinics. Now, separately, looking at the tech sector. Tech stocks tend to be sensitive to interest rates, and we know that central banks globally are looking to raise rates this year. The tech stocks that have seen some of the worst losses have been the businesses with higher debt levels and lower cash flows. So look out for companies reporting next week. Some of these include Suncorp, BWP, Commonwealth Bank, Mineral Resources, AGL, AMP, and Telstra, just to name a few. And as a reminder, you've got access to Bell Direct's interactive reporting season calendar. We've added the link in the description of this video for you to access. And as for economic data to look out for next week, business confidence data will be released on Tuesday and consumer confidence data will be released on Wednesday. Now that is all for this week. I'm Sophia Mavridis with Bell Direct. Have a great Friday and have a great weekend, and I'll see you on Monday morning.